PayPal is down over 80% from its all-time high. I'm a shareholder now. I still think it's a value. And in this video, I'm going to show you why. Here's the amazing part. I typed in PayPal to get ready. This is how much of an investor I am. I'm looking at the price for the first time in a long time. If you'd asked me to guess, I would have said, is it around 60? I have no idea. Why is that? That's probably new to you. Well, the reason I do that is because I want to focus on buying a good company at what I perceive to be a good price and then riding it out. And I set alerts for myself to buy it if it falls further. So it's at $58 a share. And look at this all-time high. July 26th, 2021, $310 a share. 2.5 years ago, it hit an all-time high of $310. Back then, the company was amazing. The company's awesome. News follows the stock price. Now, I hear a lot of negativity on PayPal. Now, here are a couple stats on PayPal. Some good, some bad. This is one of the ones I don't like. Global user number of PayPal from first quarter 2010 to fourth quarter 2023. The black line is the growth rate. It is below zero. As you can tell right here, the number of active accounts in the millions, it's pretty steady. It's pretty much the same for the last 3 years. That's definitely a problem. That could help explain why the stock went from $310 down to $58. Remember, a declining business can still be a good investment. I gave the example of blue chip stamps by Warren Buffett and Charlie Munger. When they bought it, it was $124 million in revenue. 10 years later, it was $100,000 in revenue. $124 million down to $100,000, and they got 15% returns on the company. Not saying that's the case here, but I'm saying is that maybe this is an overreaction on the stock price. Here, by country, is PayPal's usage at stores, restaurants, or other point-of-sale systems and online. Now, some people would look at this as a negative for some of these, saying, hey, look how high penetrating they are. How do they grow from that? To me, I look at it as that's stable for them. People are accustomed to it. They trust it. They keep it going. Mexico, 64%. Stores and restaurants, 84% online. Germany, 50%, 91%. The US, 58% and 79%. Internationally, online, we are the lowest. Tied for the lowest with Brazil. Isn't that incredible? Oh, no, sorry, Netherlands is 68%. People are ingrained in it. People trust Venmo. Venmo is owned by PayPal. There's a lot of things out there. I don't use Cash App. I use Venmo. I love using Venmo. I'm sure you are the same. People will say, Venmo me this. Venmo me. That's what I like about that. Now, is that a piece of their business? Of course. But it's still great that they have a connection with that user. Now, another big positive, even though they had lower number of accounts, this is the value of payments processed. Remember, in an upward growing world of inflation, the total value in US billions of dollars and the growth for versus the previous year is huge. Look at this growth rate. Look at this growth rate here. And this growth rate right here, it's always above positive right now. So yes, the number of user accounts is even for the last 3 years, but look at this growth volume. This is what's going to drive their revenue right here in addition to user growth. Now, hopefully they get more creative and can figure out a way to drive more users, but here is a positive sign. Now, would I rather have user growth, account growth in addition to this? Absolutely. I'm not denying that. But I think it's been beaten up enough, and it probably will go. Every stock I buy, I assume it's going to go lower. And it has gone lower. And I still think as it goes lower and lower, the price is probably being exaggerated a little too much on the news. There are some benefits to PayPal here. Free cash flow, 5-year average, $4.6 billion, 1 year, $4.2 billion. The return on invested capital is increasing. 12% last year versus 9.8 previous years. There's no dividend. They have a new CEO who is promising a lot of great things. We'll see if he actually performs on that stuff. But let's go look at the income statement. Let's see how they're performing over the last few years. The growth isn't huge. 15.5, 17.8, 21.5, 25, 27.5, 30. But it's still steady growth. And look at this. The year of COVID, when things skyrocketed, they've still been able to build on that and increase the amount of transactions that are occurring and their revenue going there. Let's go look at their profit. Their profit's about steady for the last 4 years. A blip last year, but before then, about $4.2 billion. So for a company that's current market cap is around $60 billion, $63 billion. They generate over $4.25 billion, is about 15 times earnings. Now, as the world grows and gets bigger and bigger, I know for me, when I buy something overseas, I skip Apple Pay. I immediately go to PayPal because I know PayPal is very big on the user experience and being very pro-user in disputes. And I love that about them. Now, their profit margin, very consistent. 5-year profit margin, 14.4%. 1 year, 14.3%, with a gross margin of 46%. Gross margin means that for every extra dollar they bring in revenue, 46% of it goes to the bottom line before interest and taxes and depreciation, all that stuff. So I still like the company. Is the stock down a lot? Absolutely. I was not a fan of it until much lower prices. I don't know when I started buying it. I forget. I don't know what my basis is. My basis is higher than what it is today. So I'm on a loss of it today, I believe. But I'm okay with that. I expect it to go lower. And as long as my thesis is the same, I will acquire more shares. Because I think, and I'll show you shortly in our stock analyzer tool, that if they're just able to increase their revenue at reasonable and profit at reasonable rates, they will be a multi-bagger, a company that can go up many times from where it is today. But again, don't do it just because I own it. And don't ever invest because somebody on the internet owns it. Even if Warren Buffett owns something, you shouldn't ride that coattail. Because you don't know the reasons why he's owning it, why I'm owning it, and it might not fit your idea of a good investment. That's really important to understand. All right, check out the 8 pillars. 8-pillar stock doesn't mean you should buy it, but it tells a story. I look at this saying, okay, buying back shares when the stock price is down a lot and a reasonable value, I think is wonderful. Increased net income of $1.8 billion, increased cash flow of only $850. So the cash flow has increased in the last 5 years by half the pace of net income. Don't like that very much. The good news is their free cash flow and net income are the same last year, basically, which is good. Big time revenue growth, $12 billion, low debt, reasonable PE and price to free cash flow. I love the fact that their 5-year price to free cash flow is significantly lower than their 5-year earnings. And their 5-year return on invested capital isn't anything to write home about, but with growing companies, it tends to be skewed. So let's see what analysts are saying about our good friend PayPal. So look at this growth, $5.60 a share this year, according to analysts, to $10.70 in 4 years. But remember, guys, analysts are very biased. I don't take what they say with any validity, especially 4 or 5 years out. We put it on here because it's good reference to sit there. And when they're being overly pessimistic, I go, what am I missing that they're being pessimistic and I'm not? That's something to understand there. And their revenue growth, high single digits, low double digits, $32.6 billion to $51 billion. If they're right, if analysts are right about $11 a share in profit in 2028, which that's a big if, you're looking at 5 times profit today. All right, that's the impressive part. Now, what's the right price to pay for them? Well, that's why we have the stock analyzer tool. Now, before I get into that, guys, I talk about this community a lot. I talk about the software a lot. It was created purely because the people watching the videos wanted the software that I had. So we created all of that and we created the community along with it. Now, I'm not asking you to make a long-term decision today. What I'm asking you to do is make an informed decision. We have a lot of tools here. There's a lot of things that come with our software. They are mobile app, everything on the mobile phone, 8 pillars, over 30 years of financial data, the stock analyzer tool, which you'll see shortly, exclusive weekly content just for the users of our community, access to Mo and I, 8-pillar portfolio, retirement calculator, and most importantly, the Everything Money community. Because guys, being an investor, especially a value investor, is a lonely road. It's nice to bounce ideas off each other. There are thousands of people in that community that talk every single day, every single week, every single month. Go to everythingmoney.com, $7 for 7 days, $1 a day, cheaper than a cup of coffee. You get all of these things versus our overpriced competitors that don't give you the full gambit. So guys, check it out. I'm going to pull up PayPal in my history to see what we did in the past. So I did it back on February 12th, not long ago. They did very reasonable revenue growth assumptions. Guys, look at this. I did 3, 5, and 7% revenue growth for my low, middle, and high. For profit margin, I did 12.5, 15.5, 18.5. Because with their higher gross margin, as they drive up their revenue, profit should increase as well. Now with free cash flow, the last 5 years has been significantly higher than the profit margin over the last 5 and 10 years than the overall profit margin. So I still went higher on my profit margin. I did 16, 20, and 24 for my free cash flow versus profit margin. For my PE, what's the PE going to be in year 10? I put 13, 16, and 19. Okay, I'm just a little conservative there. I'm okay paying 16 times. And finally, my desired return. I put the market return of 9% to say, what is this company worth today if I want to match the market? Because the market does 9 or 10%. So this is very, I think, conservative. Now, you'll have your own decisions on what the right numbers to put in, and that's why we have this software. That's why this tool has been used over 2.5 million times since we started the software by our users. I hit the Analyze button. Boom. Guys, it's pretty much all green. I have a low price of 50 to 60, high price of 120 to 160, middle price of 80 to 100. Is this enough margin of safety for you? I don't know. But guys, if you want to see the other companies that I want to own forever, check out our next video on the 30 stocks I want to own forever.